Welcome, folks. Thanks for coming to our latest episode of our new podcast, Sweatin' Money. This is episode number 2. We skipped last week and the week before, but hey, we're back. One disclosure. We may or may not have ownership or positions in some of the stocks that we mentioned in the show. Don't buy stocks based solely off of what you hear off of this podcast. Always do your own homework and research before investing in stocks. Also, we're not your fiduciaries. Anything else to add to that?
That means your mom and dad.
Yeah. Okay.
Yeah.
There you go. So, if you don't know who I am, I'm your host, Kong, along with my co-host, Gibson. And on to our first topic.
All right. First topic. What is it?
Averages. Actually, I was hoping we could talk about this. The reason why I want to do this is because of this guy right here.
Who's that guy?
Oh, wow. That didn't happen. Well, that guy was Paul Tudor Jones.
Yeah. What do he has to say about averages?
So one of the things that he recommends is the 200-day average. If any stock you buy falls below its 200-day average, then just sell it immediately, is what he advocates.
All right. What's the rhyme and reason behind that? What's the logic?
Well, because after 200 days, if it's still falling, it's a piece of shit. You might as well just, turn the fuck around and run. Oh, man. Now that I cussed.
Beep yourself.
Yeah, I guess now I got to do some more post-production. Crap.
Fantastic.
Anyways.
Glad I'm not you.
Yeah. Screw you, Jackson.
Oh, you should bleep that out too.
Yeah, probably.
More work.
God. Okay. On to averages. So averages. So there are several different there are several different methods. One of them is called the crossover. I don't know if you've heard of that.
Yeah, I've seen a lot of these type of charts and technicals.
Yeah. So with crossovers, I mean, like we said with Paul Tudor Jones, one of his favorite numbers is 200 days. It's basically to look at overall trends. If a stock is going down, then after that set date that you have or set time period that you have, you can tell within this period it's going down or the stock's going up. So it kind of helps you in the decision making process. So everyone has a certain date that's determined by their own selves. I mean, some go with 15, some go with 90 days, 60, 200, like you said, Paul Tudor Jones or whatever, right? What basically determines these things? It's as simple as this. How do you choose them? If you're looking at longer term trends, you're going to want to look at more days. So 200 days is just about right for like the really long term positions. And if you have short terms, as in you're getting ready to just buy and immediately sell, 15 days, 10 days even, I can't say is there anything to add beyond that? Because I can't exactly say oh, well, what's right for me? I don't know what's right for you, man.
I don't know. I mean, it's interesting because then you're using an average to try. I personally believe more in psychology behind the movement of markets, more so than the math. But that's just my personal opinion on it. Because then what is an average? You're like, why does this mathematical principle apply to this graph or anything? I guess you kind of try and use the math to predict the psychology behind the movements. But I think for me is a lot of times we read the market news and sentiment that are following that stock, you can kind of grasp why the market might be moving in that direction as well.
Yeah, I'm not saying that this is somehow better than what you're talking about. I'm just saying that this is just another piece of information that you can add to what you're using.
Oh yeah, no, I'm just saying it's interesting as well.
Yeah, but if you want to find more information about averages, you can go to this website right here, www.investopedia.com, and all that other stuff.
It's on the screen.
It's on the screen. So there you go. And then some of the other things that are related to averages. Sometimes what they'll do is, I guess, they'll combine averages. They'll look at different indexes. So, say maybe if you have the 200, 100. And the 30-day index is like when you look at the charts,
Mm-hmm.
it'll actually kind of look like a ribbon that's either going up, like up or down.
Mm-hmm.
So then if it's all going up, then it's probably a good time to buy because it's probably going to go up no matter what happens. But then like if it's all going down, then you might want to start, putting options on there.
I do like it does reflect on one of my strategies is in essence looking over a bunch of like multitude of indexes and looking at comparables. Like let's say I'm buying, I don't know, like Honda or something. And then I have Honda, then I have Toyota. Like, basically what companies do what Honda does. You got Honda, you have Toyota, General Motors, and various other ones. And in essence is that if the market is just picking up and just a sudden demand for cars, it's very possible that all three companies will experience a growth in their stock price.
Yeah.
So there's also things that happen at a market level. There's also things that happen within a sector level. So my example is illustrating a sector level, but let's just say that there's a ton of demand for American products. Well, that can basically drive the price up as well. So I do, sometimes I often look at the comparables, and I also look at the overall indexes and sector indexes to just kind of see if maybe, there's a sudden dip in a price and maybe it's possibly unjustified, or maybe it'll be naturally corrected just by the overall demand across either the sector, the industry, or just like American products.
Yeah, actually, speaking of Honda, that's one of the companies that I do own, Jackson.
That's great. Beep.
Beep, yep. Gibson.
Gibson? That's great. We'll work out those kinks.
Yeah, we'll work those out. Oh, man. All right, so, yeah. Next topic. Yep. Here you go.
Speaking of Honda.
So one of the issues I have with Honda right now is that compared to last year, if you notice in this box right here, this is the period that it's actually given out in dividends. And they were at about 24 cents last year. Now, if you look at this next period right here, this was basically the year that this is basically last year. Notice how they had missed 2 payments, and this was during that time frame when the whole issue with the Takata airbags had come out.
I see.
But I mean but if you look at this didn't come out. It didn't really come out until November. Let me think. Let me try to recap. I think it was around November is when it actually came out. So before that, they were already having enough trouble in their company that they had to miss payments on their dividends. So I think when I bought it was around like maybe 34, 36. And I'm pretty sure with the way the stock market has performed today, it's probably way below that. So if you look at this year so far, it's at this right here where there's been no dividend payments whatsoever this year. And that completely defeats the purpose of buying this stock. I bought it for I bought it because it offered dividends, and I wanted to be able to to set it up so that I buy enough of the stock so that every time it pays out a dividend, it's enough of a payment to get another Honda stock. But now that this is happening, then not really good. So in my head, I'm wondering like, should I get rid of this, or should I just hold on to it in hopes that they'll bring back the dividends, or just wait till get rid of it like at when it reaches back at the price range that I had bought it at?
Yeah, I think there's multiple ways of thinking about it. There's definitely I understand the mindset of a dividend investor, and in this case, I mean, Hondas are extremely, extremely, extremely reliable vehicles. I think to their own detriment, they have extremely reliable vehicles. And I have a Honda, and I had it since 2004 or something, and I'm just waiting for the car to just die, so I could get a new car, but it just won't. It's possibly like the best $14,000 I've ever spent on a vehicle ever. And it's super cheap, highly reliable, super fuel efficient. So as a company, I think they make great products. although as a dividend investor, I would be extremely disappointed by what they're doing. But sometimes, if you're especially if you're in a long-term hold, like long-term buy and hold position, you might want to think about it as a form of supporting the company and encouraging it to keep producing the same type of products.
But that's wherein lies the problem, and this is where we kind of deviate away from investing and more into, well, really beliefs in politics at this point. Because then if you're talking about supporting the company for what they do, and that is part of the reason why I also chose to invest in Honda. I mean, the fact that they had dividends, wonderful. But I chose to invest in them because, I mean, aside from the great cars that they've made in the past, they're let's not forget they're also in motorcycles, and they also make jet engines as well. They recently just came out with a new jet engine for a new form of jet that actually may be a more affordable jet for the average pilot, or not average pilot. But
I thought you meant the average millionaire. I'm like,
well, that too, I suppose. But I mean, like, it is more affordable than other jets.
I see.
So in that sense, like, yeah, they and historically, Honda has been extremely innovative, and this is due to the fact that they pump so much money into their R&D. And any company that usually pumps money into their R&D usually does just phenomenal. Like, even during a downturn, as long as they just keep dumping money into that R&D, they're going to come up with some crazy product. And it's like when things are all right and, the economy's all fine and dandy again, then, like, bam, they come out with something that just blows everyone out, just blows everyone away. But for an investor, I want these guys to perform.
Yeah.
And I mean, like, yeah, I can love them for what they used to do, but if they're not performing, and if they're not giving me some sort of innovative product that can actually impress, like, and actually bring back some value to their stock, then honestly, why would I support Honda as opposed to a company like, say, Tesla?
That's a good question. I think, I would say it has a lot to do, a lot of people buying and holding onto things has a lot to do with the cult following, really. Tesla bleeds money every single year, every single quarter. And yeah, there's no sign of them stopping, yet their stock price keeps going up. There's pretty much no explanation for that. But with Honda, I would say that I'm a bit intrigued. If I were to look at the stock, I would kind of look at the earnings across the years, and I would kind of consider factors like, like global economic, or basically just overall movement with the Dow indexes or the S&P 500 indexes, and just see where the overall trend in the stock market is and whether or not it's picking up, maybe experience a downturn. And I might even look at the oil prices and take a look at what the oil companies are doing on what the gas prices are. I believe all these things would come into play, especially with Honda. For example, Honda there's a concept in economics, it's a luxury good or normal good. So basically things you buy, normal times, and like just the day to day, and then things you buy because you have extra money to spare. And I feel like, Hondas might perform better in times where you just basically not as well off, perhaps.
Well, I mean, if you're talking about, like, the initial price, but of course, because of the way Hondas are, they tend to, I mean, like, certain areas like California and especially Hawaii. Oh, geez, I can tell you that Hawaii Hondas, especially with Honda Civics, their parts get stolen easily because, I mean, that's part of the success of Honda is that their parts are so easily interchangeable.
Oh yeah, that's amazing.
So that's another. They're reliable, but because they're so reliable, that's also their downfall, and that they end up being a sort of liability as well. I mean, I had a friend who had his Honda Civic stolen like 4 times, and finally, this is in Hawaii now. This is after I left the island, but he had the typical, like, issue where, like, after a certain time, then, his car gets stolen, and next thing you know, he finds it burned somewhere with, like, a bunch of bullet holes, and, like, it's all blown up and stuff. Because that's what they do out there for fun, after they steal your car parts and sell them off to someone else for, like, a certain amount of money, then they all get drunk and high, and then they blow up your car and, like, shoot a bunch of holes in it because it's fun.
That's totally not what I think about when I think about Hawaii. Shocking.
Well, I always tell people that if they wanted a really accurate image of Hawaii, then just watch Dog the Bounty Hunter. But hey.
I'm gonna have to check that show out. But that being said, is just think about how cheap it would be to fix the Honda or possibly replace it.
Yeah, except for when it's all blown up and stuff. But anyways,
insurance.
Anyways, yeah. So things to consider with Honda, whether I should give it up or not. If anyone out there in the interwebs has any opinions on this, let me know.
I do have an opinion on it right now. Is that perhaps you might want to sell it just because of the global market sell-off.
Oh yeah, there is that. Yeah, there is that. But actually, another thing to consider as well is when you're talking about how it performs against other companies in its class in the industry.
That's true.
Honda has not been performing as well as other car companies. Not as bad as like I think GM, of course, or like Ford wasn't all that great either. Although their dividends are still better than Honda's right now.
Well, then the question is, who's overtaking them? Is it possible?
Toyota
that
for sure.
Toyota, really?
Oh,
is
yeah.
it because of the Priuses or? What are they selling that's so much better?
Part of it is the Prius, but I mean Toyota has always been the heavy giant. Like they've outsold any car company ever since the 80s, really.
Really? That's shocking for me.
Yeah.
I don't really.
They have, in terms of reliability for like the family car, Toyota is the car to have.
Really?
Yeah.
There we go.
So
Toyota, you hear that? We need some money from you.
Yeah, and I mean like, I'm not gonna get into the specifics of why I chose Honda over Toyota, but I mean, yeah. Anyways, there. So, the other stock I wanted to talk about is Wal-Mart. I don't have a specific slide for that, unfortunately. I didn't have time to prepare. But that's another stock that I have, and just with compared to last year, I think the value has gone down. Like I think it's something like 14% or something like that.
That's horrible.
Yeah. I don't know if you know anything about like Walmart and how the economy's doing. What are some of the deals, troubles they're having?
Well, I would definitely, for me, is I have a practice of setting limit stops, and in essence that. Well, what percentage should I set a limit stop at, or what dollar amount? There is no specific one, because in the end of the day, all you can do is make a judgment call. And my limit stops are based on what will indicate that I made a wrong judgment call. For example, I might predict a stock to go up. I'm like, okay, you know what? I'm going to set, after it climbs a certain amount, I'm going to set a loss, set a limit stop at a certain gain percentage. So I lock in a gain. Or let's say I make a call, I'm thinking it's going to go up, but it's also possible it goes down. And of course, if it goes down, I made a wrong call because my information is just wrong. So I immediately sell it and then reassess the situation. Because I think, in my opinion, it's better off to let it go and then reassess the situation where you can make a good call than rather just hold it and pray that it will someday gain, which is also possible. A lot of advisors would tell you to just hold on to the stock, and perhaps it's a good time to buy the stock because it's tanking. But at the same time, if you read the news regarding why it's tanking, and say, hey, global market sell-off, or this company has, like, their cars have brake problems or something, you can tell that for the most part, it's just going to dip for a period of time, or it's going to experience a very strong dip. So I wouldn't want really holding onto the stock for that. I mean, if I really believe in a company, really want to hold the position, I'll just wait for it to finish dipping and then buy back in. So with Walmart, there's a lot of factors going into Walmart. I think a lot of it, China, one of the reasons why there's a giant global dip right now is China is such a huge player in our market right now. Walmart is trying to push into China. They're trying to basically sell in China and become a major retailer.
Big mistake.
Yeah, so they're failing at that. So I think a lot of people are disappointed. And also, I believe there's a few branches, they just weren't as profitable as they need to be. And Walmart's been closing a lot of stores all across the nation.
Yeah, well, I mean, aside from their issues domestically, going back to China. I mean, it's not just them that's having troubles in China. I mean, Home Depot for some reason they couldn't break into the Chinese market either.
Well, that makes a lot of sense.
Well, I mean, to you and me, it does. I mean, we know that the average Chinese person would much rather pay someone else to do the work for them rather than go improve on their home themselves.
Well, not so much of that. I mean,
it very much is that. I mean,
you think so?
Yeah.
I don't know. I just feel like in it's a little bit different because then in America, like especially like California, you have all this space. You could build a deck, a patio, work on your roofing. But in China, most of the people there live in like condos that are like 40, 50 stories high. How much home improvement can you do to a condo that's
Yeah,
like very small?
yeah. That's why they've over the past year or two they've gone into making more smaller homes and more doing more interior home decoration type stuff, like
Mm-hmm.
like interior home modifications rather than like what you're talking about.
Mm-hmm.
But that is not the case for people that are out west or in Inner Mongolia or like up in Tibet. Those places are much more sparse in population.
Yeah, but I would imagine like if I were to think about it, I would think about like, oh, what is the global like that city's population, that
Right.
area's population, and the density, right?
Yeah.
I'm gonna take a city like, I'm not too sure if Home Depot do too well in New York City per se. Maybe the outskirts of New York City, but
Right. Yeah. Yeah.
even
Yeah.
then they have to have a strong density population to
Yeah.
support the store, right? So
Yeah.
I think a city like Los Angeles is great for Home Depot because it is both a very prosperous city and it's very sprout out. What you want, an ideal environment is extremely sprout out, not very concentrated environment where people can do things like work on their garden, roofing, deck, patio, extra rooms, timber, all this other stuff. But when you have a
Right.
very concentrated, dense city, like most of the metropolitan cities in China, I don't imagine they have much to do there. I mean, maybe install an air conditioning unit, maybe have a new refrigerator, and possibly change interiors a little bit, possibly change the tiles on the floor, but not much more than that. I would imagine if the same model might work great in America, might not work so great in China.
Right. So what Jackson's trying to get at is that in a place like LA
Beep.
where it's
Beep.
beep Gibson. So what Gibson's trying to get at is the issue with LA is that it's a very sprawled out city as opposed to say New York or San Francisco where everything is built up. Now anywhere around San Francisco, if you're familiar with the Bay Area, so places like say even not downtown Oakland, but parts of Oakland, parts of Richmond, the poor areas, or like any of the other Bay Area surroundings, not downtown San Jose, but other parts of San Jose as well. Which are more spread out. You have the opportunity, the space to do these sorts of projects, but in a place where you're not building out, you're building up. That opportunity is not as available. So yeah, I mean, yeah, there is that.
That's just a theory. I mean, feel free to like disprove me. That would be very interesting. Or like looking at the data because just don't have the time for a lot of these things. But I imagine that would have a lot to do with it.
Yeah. Yeah. Other than that, the issue with the markets this whole entire week. I mean, what just a couple days ago, it was like it started going up. It went down like 144 points and like another 300, and then today it was like another 500 points. It went down.
Oh yeah, it went down dramatically. It's like 3.6%. It wiped out the gains for a year. Anyone who's
Yeah.
holding stocks at the beginning of the year and basically at this point today, they basically lost all their gains. That is shocking.
Yeah.
It's fantastic for me because I shorted the market, but it's horrible for a lot of people. They're thinking, oh my God, I can't believe my money just went away. Of course, I sold off everything and held in cash form. So even if the market dipped, it wouldn't affect me much. And then in addition to that, I bought something known as an inverse ETF. So like electronic trading funds that basically capitalize on when the market's dipping. So today was a pretty good day for me.
Nice.
Understatement. It was a fantastic day. Yes. So
I don't know anything to add to that whole thing. I mean, what do you think are some of the things that are behind it? I mean, of course, people are talking about the Chinese depreciation of their currency. There's that. Of course, there's the Greece issue that's floating around again. I mean, recently because the Greek Prime Minister caved in to EU demands, he faced a lot of criticism from people from his own party and people within his own country, and so he just resigned. there was that.
That's true.
There were a bunch
There are many
of
factors.
Yeah.
The Fed hike rate, the Fed's possibly entertaining a hike in the interest rate. Iran, Greece, China, and what's very interesting is that I think out of all these factors, now the Greece problem has an impact on the market because of euro and the confidence in euro. Now, why does the European market has any? We're fucking America, right? Or beep, whatever. We're in America,
Beep.
so why do we even care about like Europe, right? Or why do we care about China? Why do we care about Iran? Why do we care about the rest of the world? Well, it's simple. It's because a GDP is a factor is a factor of imports and exports. And basically export means we need to sell to these people. And if these are basically our clients on a global scale, and if they're going broke, then we most likely won't be selling as much stuff, which means our GDP is going to shrink, which means that we're going to have less money floating around, which means that this prosperity, this immaculate prosperity we're experiencing might stop. And everyone is freaking out about that right now. And that is pretty much what's driving the entire dip in the market, at least according to me and a lot of financial analysts
Yeah, that's
out
pretty
there.
much what everybody's saying right now.
Yeah. I've called it though. I called this.
Of course.
Yeah.
Soothsayer.
I'm such a pessimist.
But is there anything else to add, or I think we're good?
Yeah. Well, I just think that it's an interesting time period, and I think, if you're not comfortable, if you can't make a bet on either as a gain or a loss or whatnot, holding on to cash is not bad. Because if you hold on to cash and the market dips, your money appreciated.
Yeah, gold is coming back up.
I don't know, but I need to think about gold. But I would find a reverse fund a little bit safer than gold right now.
Come on, haven't you been watching Fox News? Buy gold.
Buy gold. I bought gold and lost money. Damn it. Damn you, Fox News. Give me back my money.
Actually, my friend did actually. It actually
I know.
happened to him, man.
I know it's horrible. Had I bought a reverse fund, I would have been well into the money right now. But no. But it takes gonads. It takes gonads to do reverse, to short a stock because of the margin calls and the interest rate on the margins and the infinite loss you can experience when a stock skyrockets up. But with a reverse ETF fund, that loss is limited, which is pretty cool.
Yep. So do you have any recommendations for our audience? What 11 people we may get?
Well, I think a rising tide lifts all boats. A receding tide shows who's not wearing their shorts. So this is a receding tide. If there's any stock that's performing immaculately well right now, that might be is a good opportunity to buy a very, very solid company that, despite any type of trends like panics and whatnot, they could just hold their own, which I think would be rare right now. I don't think anyone's going to really be holding their own, which is kind of why I really like the idea of either A, holding onto cash, or B, I do like the idea of reverse indexes. It's a decent hedge against a tanking position. I just understand that if everyone's going broke, who's going to buy anything? What are they going to buy? And for me, that's hard for me to think about, because I'm thinking, well, if I'm not going to have money, I might even not buy as much food. I might not go as much, and etc. So I would recommend right now to either hold on to cash or consider inverse ETFs, at least for Monday. I would wake up at 6. I would wake up right before market opens, check how the world's doing, the news, and whether or not the panic in China has subsided, which I highly doubt. In fact, right now we're experiencing a ton of negativity. A lot of companies reporting losses and missing earnings. So I think this might be a period of time where everyone's thinking, hey, there's a lot of negative news right now. We might as well just unload everything. So I would watch it very carefully in the mornings. And, if there's just another giant dip coming, you see it coming, maybe it might be a good time to exit the market or just do a reverse on various sectors. If you don't know exactly which stock or sector to hit or anything, you might just want to do a reverse on a giant index, kind of like a SH which is the one for S&P 500, and there's other ones, but the term is just reverse index ETFs.
Okay. Well, I don't have a recommendation as far as like stocks or how to invest necessarily. But one recommendation I do have is I did show you a nightly business report before, but another thing I've started getting into, this is more on the technical analysis side, is a YouTube series called Market Forecast, and this guy just basically looks at the tails, and like you just looks at all these different charts and says looks at the where it dips and where things rise, and he just talks about and using it from that aspect to talk about the trends that are going on right now in the markets. I think it's a pretty good series. I nice compliment at least to Nightly Business Report.
Yeah, I think that'd be interesting. I would love to take a look at it sometime and then check it out. There's a lot of there's a lot of tools that you need to use to analyze the market. One is because a lot of consumers react to the news and what's happening, and a lot of people, basically, the major holders of a lot of stocks aren't people, regular people. They're just institutional holders. So if they decide to not sell, the stock's price is going to hold. Of course, if they decide to sell, it's going to tank. And a lot of times, perhaps, the technical indicators is more not so much for, interpreting the sentiment of the market, but more so if, the big players are trying to do something in the market right now.
Yeah. Well, that's it for today's episode. Thank you for coming here. And thank you for listening, folks. That's it.
Yeah,
Bye.
always a pleasure.